and brazenly, and he told the was not at all true. So I thought, why not to help? But they are not aware of those things, those myths. So I tried to make one small video so that all myths can be shattered and the facts can be brought in front of investors. So basically, the number one myth or number one pitch, what LIC agents used to say is that all LIC products have what sovereign guarantee. Actually, when I asked him what is a sovereign guarantee, he could not mention it properly. He could not explain it. Sovereign guarantee means sum assured plus declared bonus is guaranteed by Government of India. But at the same time, that is on the past. There is no guarantee as far as future businesses or bonus is concerned. So whatever bonuses are declared, they are guaranteed by Government of India. So there is nothing great in this. Now this is a myth because all insurance companies are so deep pocketed and they have got so much leverage that they can, I mean, easily give whatever they are saying as far as bonus are concerned. And like banks, insurance company seldomly default. And even if they default, there are 10 other companies standing in queue to buy their business. And for a confirmation, insurance has been opened in India since 1999. In 2001, 2002, private insurance companies started uh, selling their products. Some of the companies have gone back, uh, like AMP, Sanmar, and all that, or New York Life, but their stake has been bought by Indian partners, and not even a single claim has been denied as far as sum assured plus bonuses is concerned. And also, it will never be get denied. Myth number two: the product gives guarantee returns. Now, post 2006, there is no guarantee whatsoever is there as far as invested amount is concerned. Whatever guarantees LIC agent used to claim is basically on sum assured. A sum assured guarantee and guarantee on investment both are two different things. If you take it on sum assured, it is far more lesser than. For example, if the guarantee is of 8% on sum assured, that actually is basically only 4% on invested amount. So please be alert. And there are a lot of plans in which even sum assured is not guaranteed if the policy premium term is less than 20 years. Is LIC has so many properties or net worth of 25 lakh crores and all that, blah, blah, blah. True, but as an investor, you don't get any benefit out of that. LIC is not going to sell those properties and give the proceedings to their policy holders. No, not at all. That is their infrastructure. It just indicates how sound LIC is, and there is no doubt about it. But as far as policyholder is concerned, he is going to get whatever is left after paying all death claims, after paying all marketing expenses and all policy charges, and in the way of bonus. Mind you, all bonuses are simple reversionary bonus. No bonus gets compounded. It means you are going to get returns on simple interest basis, not on compound interest basis. For example, if today interest is 40 rupees, if it has been added in your as a bonus has been added to your policy, even after 20 years, 30 years, whatever the term is, the amount will remain 40 rupees only. Whereas had it been compounded, it would have become 100 rupees or 120 rupees in that duration of time. Another myth which I saw that LIC agent was peddling is that LIC will give so much loyalty bonus and terminal bonus. These all are, just rubbish. Nobody knows what are going to be the future bonuses or future loyalty uh, or terminal bonus. They all depends upon the performance or the experience of the company. They may give, they may not give, but there's no guarantee. But what they claim that they all think is a guarantee. Another myth is that LIC bonus will never come down. That is again a big rubbish. LIC bonuses are coming down continuously from last 8 years, and in fact, if whatever investment they are doing in government securities, let me tell you that long-term interest rates in USA, Japan are close to zero. In Spain, yield has become practically zero. You might have been noting that. So, if you are investing today, and going forward in India also, if interest rate becomes zero or close to that, say 2 or 2.5%, that you will not get the same kind of returns what you are getting right now. So there is absolutely no guarantee of performance of uh, bonus as far as LIC is concerned. India GSEC yield you see is right now around 5.95%. It is coming down continuously. This is 10-year-old monthly chart. From 2010, it was 8.5%. Now it is 5.95%. And you can see that it is coming down every day from every month from last 2 years. So there are no chances that yield is going to go up. So your returns are not going to be more than 6% because that is where LIC invests maximum of its money, and that is where they get return. And after that, they deduct their office expenses, the mortality charges, the policy administration charges, marketing charges, and all that. And post whatever is left is then paid as a bonus for that particular year. Now, another myth is that LIC invest 100% of the money what you invest because no, I mean we have just done simple calculation post commission. First year the commission is almost 35%, and if the policy term is 20 years or more, and second year also the agent used to get 5% till the policy is there. So we have just taken only 7.5% as the expenses, and we have taken what are the returns on the balance amount. So first year, if you are investing 100 rupees, only 50 rupees get invested, and of that only 2 rupees is generated as return. After first year, the policy has got value of only 52 rupees. Okay, actually it may be lower also, but I'm just taking one example. Second year, if you invest 193 rupees get invested, 6 rupees is the return. So if you add on all that, so it is 152 rupees at the end of 2 years. So the 200 rupees investment becomes 150. Third year, if you invest, it becomes 252. So in that way, you see after seventh year, if 4% return post all expenses and deduction, if it is given to the policyholder, after 7 year, the original amount comes. I mean, 700 rupees becomes 704 at the end of 7 years. So that is the way the policy is going to grow. And after 20 years, 2000 rupees become 2772. So the return, the yield is just 3%. So anyone, if you is telling you 8% or 7% or 9% or 10%, that is all rubbish. Please don't go by that, because LIC, if this is the return, if they are getting 6%, they are passing on 4% to the policyholder. They are ending up only giving at 3% compounded return. Okay. So another myth is pension products are tax free. No, not even a single product is a tax free. All products have got tax liability if their pension is written in them. If pension is not written in them, then the mortality charges will be quite high for senior age, and there is no point in buying that policy. And if it is a money back policy which is giving you money after say 10 years, 15 years, then trust me, the returns will not be even 2% in that policy, because money back policy are the worst performer as far as returns are concerned. Another myth is that LIC doesn't have NPA problem. No, it is not like that. Last year, they took IDBI Bank and they incurred loss of 18,000 crores because it was forced by government. It is still, below the price at which they bought the stake in IDBI Bank. They may sell it, but again, it is not certain at what price they are going to sell. So until they not sell at higher price, that remains NPA in their books. So several companies, they are giving money to, they are forced by government to give loan to PSUs and to municipalities and all that. And we don't know what is actual happening in them, because the LIC doesn't share all their financials with public, because LIC is not public limited company, and they doesn't come under Company Act also. They are under corporation. A lot of opaqueness is there in the model. So as far as LIC disclosures, public disclosures, on March 31st, 2020, The gross NPA as a percentage of debt portfolio was almost 8%, which is pretty high. Like, banks, even banks don't have that kind of NPA. And these are all from LIC website only. LIC investment portfolio yield has slipped to 8-year low in 2019. So there is also, some, uh, video related to the falling yield of LIC. So this is nothing like that LIC doesn't have NPA or doesn't have bad loans. They all have. And another myth that insurance agent was peddling, that all agents of private insurance companies are running away from one company to another. They may be right. There is nothing wrong. Every agent has got right to look for his betterment. And insurance is a long-term business. Companies are there from last 200 years. So if you are dealing with any company, agent may be there, may not be there, but company are always going to be there. So always remember this: you are dealing with company, not with an agent. Agent is just a mediator, and agent has got no role as far as performance of policy is concerned. So that all depends upon the investment experience. Again, another myth people used to peddle is that LIC will offer better return than other companies. Actually, all insurance companies have got strict guidelines as far as IRDA is concerned. They can invest only 15% in equities, balance 80 to 85% money is invested in government securities. And as we have already discussed, government securities returns are coming down. Right now at 5.95% government yield are there. And if LIC deduct their charges and all that, so hardly 4% will be left for the customer. So barring unforeseen high death claim scenario, which is not positive for LIC as it has got major claim, all returns from all insurance company in traditional plans are going to be the same in 10, 20 or 30 years of time. Some year one may have more, some year another may have less. But if you see on an average basis, all companies' returns are going to be the same, because all actuaries who designed all these policies have got very vast range of experience. So and their investment team is also, more or less similar. So there is not going to be any materialistic difference if you buy a traditional plan from one company or from other company. So my take is that you should not mix investment and insurance. Both are totally different things. Investment is, investment should only be taken care when your insurance is properly, taken out. For example, whatever is your human life value, based on that, you should take a financial uh, planning. Based on that, you should buy your insurance. And insurance can be bought as a term insurance also. Although I'm not very big supporter of term insurance, but term insurance serves the need, and the balance money you can put into any funds. Even if you want to go for a debt fund, here LIC puts their money. There are a lot of debt funds which are available, long term, short term, where you can put your money in PPF, you can put your money in NSC, and that combination plus term insurance will give you better returns. Disclaimer. So these are all myths which are peddled by LIC agent. Never fall for them. Always ask for, LIC illustration. Normally you will not get. They don't share their official illustration because they understand they normally share some magic software or illustration which has got nothing to do with actual performance of LIC. So if all insurance company, whenever you are buying any insurance product, always ask for official illustration as per your age, and you will see what are the actual returns as shown in the illustration as per IRD, 4%, 6%, and all those things. So disclaimer is that no vested interest. I don't sell any insurance. This is only to guide all investors who don't have financial literacy. Not against LIC as a company at all. In fact, they have done fabulous job. I am a staunch believer in insurance as a financial tool. I'm only against those unscrupulous agents who dupes investors in the name of LIC and missells heavily. And afterwards, the customer remains, paid to get his money or get his whatever the fake promises he has made. So my views are personal, but they are based on scientific analysis of insurance. You can email me at rhgcfp@gmail.com. My phone number is 97542925575. Thanks for watching this video. Please like, share, and subscribe to my channel for more such informative video on financial planning, options trading. Thank you. Thank you, gentlemen.